Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is February 12th, 2025. Good morning, everyone. I hope you're all well and ready for a deep dive into the markets this fine winter day. We have a lot to cover, from a quick market overview to a detailed analysis of major headlines and sector updates. So grab your coffee, settle in, and let's get started.
Let's kick things off with a quick market overview. The major U.S. indexes had a mixed bag of activity in early trading. The S&P 500 is trading at roughly 6,031.7, up by approximately 0.1%, a modest climb that shows some underlying resilience. Now, if you turn your attention to the Dow Jones, things are a bit different. It's sitting around 44,222.4, down by about 0.3%. It's almost as if the Dow decided to take a little nap while the S&P limped along with a smile. Over on the Nasdaq, we're seeing a more enthusiastic performance, trading around 19,553.3 and up by nearly 0.6%. The tech-heavy Nasdaq seems to be enjoying the momentum this morning, hinting at investors' renewed confidence in the technology sector.
Turning our attention to the smaller cap arena, the Russell 2000 stands at roughly 2,242.9, down by around 0.3%. It's always interesting to watch the small cap indexes. They often tell us where investor sentiment might be heading next. And because we're not just about stocks, let's talk cryptocurrencies. Bitcoin is trading near 95,481.3, just slightly down by about 0.3%. Similarly, Ethereum is holding at roughly 2,591.5, down by nearly 0.4%. While these moves appear minor at first glance, they're often the canary in the coal mine, subtly hinting at how broader sentiment might shift in the near future.
Now let's move into our deep dive into major market trends. One key discussion point today is the Federal Reserve and their nuanced playbook as it relates to market direction. Just earlier today, we saw a rather hot consumer price index report that set the stage for some significant movements in the currency markets, most notably the US dollar surging. This strong CPI came as a bit of a surprise for many, driving significant gains for the greenback and even prompting a 1% drop in S&P 500 futures. But here's the kicker. Despite this shock to the system, many seasoned analysts, myself included, believe that the market isn't going to continue in this downward spiral. The talk about residual seasonality in the CPI is gaining traction, and it might exactly be the factor that keeps inflation figures in check for the time being.
It's almost as if the market is having a conversation with us today. Yes, the numbers are a bit spicy, but can you handle the heat? And handle it we might as we consider the factors at play. The interplay between inflation data and investor sentiment is like watching a high-stakes chess match, each move carefully calculated, and the anticipation is palpable. Many are wondering, will the bullish momentum in tech stocks overcome these short-term jitters from inflation? And what about the broader implications for monetary policy? These are the sorts of questions that keep me up at night, and I suspect they're your questions too. We're at a juncture where every piece of economic data is like a piece of a sprawling puzzle. It takes time, careful reflection, and often a little bit of humor to appreciate the full picture.
Moving on to the headlines shaping today's narrative, we have a dozen stories that are creating waves across the financial landscape, each with its own unique implications. Our first headline comes from the Federal Reserve's commentary. There's been a notable shift in the talk of ammunition available to the Fed. In light of the sticky inflation figures and robust U.S. dollar performance, pundits are questioning what tools remain in the arsenal. The consensus seems to be that while the Fed might have a little less ammunition, there's still plenty left in the box. The key question remains, what next for the markets? It's a fascinating debate that highlights the delicate balance between monetary policy and investor confidence.
Next, we have a story that has captured the attention of retail and institutional investors alike, and that is the surprising surge in CVS's stock. Yes, CVS's share price soared toward a 3-month high after its quarterly profit exceeded expectations by the widest margin in over 4 years. This is a remarkable turnaround for the company, driven largely by a progressive improvement in its pharmacist benefit management business. In an industry where margins can be razor-thin and competition is fierce, CVS has managed to carve out a niche for itself by consistently delivering robust performance. It makes one wonder if other players in the healthcare sector might take a page out of CVS's playbook soon.
Another critical headline involves Intel, a name that resonates with tech enthusiasts and investors the world over. In what seems to be a forward-looking strategy session, Baird, a respected research firm, has been casting light on Intel's potential strategic moves, including a fab spinoff and potential involvement from Taiwan's semiconductor manufacturing company. With Intel's renewed focus on semiconductor innovation and production efficiency, this story suggests that significant structural changes might be on the horizon. The industry has been buzzing with anticipation over how these moves could position Intel in this fast-paced tech environment. It's a classic tale of industry giants reimagining their futures, and it's hard not to be intrigued when the stakes are this high.
On another front, the energy and resource sector is not to be overlooked. Arcadium Lithium has been catching investor attention due to the report of Canadian regulatory approval for a major Rio Tinto deal. Lithium, the darling of the electric vehicle revolution, continues to be a hot commodity. With governments and corporations alike aiming for greener futures, any positive development here is bound to cause ripple effects across related markets. Arcadium Lithium's gains are a testament to the growing conviction that the green energy transition is not just a buzzword, but a strategic imperative.
Speaking of automobiles, our next headline takes us into the heated debate sparked by former President Trump's tariff plan. Although it appears that there's been a pause on the proposal to implement 25% tariffs on products coming from Canada and Mexico, the U.S. auto sector is still reeling from the earlier jitters. From supply chain disruptions to pricing pressure, the auto industry finds itself in a precarious balancing act. Investors are asking, will these lingering uncertainties prevent the sector from regaining its full momentum, or are these just temporary setbacks in an otherwise robust market? It's a question that many industry insiders are mulling over as they brace for further developments.
Now let's turn to a story that has stirred up robust debate among Silicon Valley insiders and industrial strategists alike. Supermicro's stock is surging following a positive revenue outlook for the next fiscal year, an ambitious projection targeting an astronomical $40 billion in revenue. However, not everyone is on board with this rosy forecast. Some analysts have expressed skepticism, citing intense competition and market saturation as potential hurdles. It's a classic scenario of high expectations meeting the grim realities of market forces, a scenario that always reminds me of my own attempts at baking dinner. High hopes sometimes meet a not-so-pleasing result. It's a humorous comparison, but the underlying message remains clear. Even buoyant forecasts require cautious optimism.
In another twist to the narrative, we have a story involving Frontier stock. It appears that the company's shares slid by 3% as Spirit once again rebuffed a takeover offer from a budget airline. This isn't the first time we've seen such corporate back and forth, and it certainly leaves us wondering about the dynamics at play in the highly competitive world of air travel. The boardroom battles in the aviation space are as complex as they are riveting, and they often serve as a reminder that even in expansive, high-flying industries, the devil is in the details.
Now, shifting gears to a more positive note in the same industry, we have a story about Apollo Funds. They have acquired Bold Production Services, a leading provider of production-linked contracted gas treatment solutions. This strategic move is designed to further accelerate Bold's growth in the face of increasing demand for U.S. natural gas and associated treatment solutions. What's particularly noteworthy here is the broader sector implication. It underscores how strategic acquisitions continue to shape the competitive landscape in energy and industrial services. It's a bold move that has the potential to yield significant benefits for both companies involved.
There's also an intriguing merger rumor swirling in the retail sector. Sources indicate that the owner of supermarket giants, Giant and Stop and Shop, isn't outright dismissing the idea of a potential merge with Kroger. While nothing has been confirmed yet, the mere mention of a possible merge has sent ripples of speculation throughout the industry. If such a merger were to take place, it could redefine the competitive dynamics in the grocery market, forcing other players to re-examine their strategies in order to keep up. It's an evolving story that is sure to captivate market followers in the coming weeks.
And lastly, on our list of headline stories, we have news coming from one of the towering names in the food industry, Kraft Heinz. The company has recently wrapped up what it described as a challenging year, issuing a profit warning. Despite this cautionary note, Kraft Heinz has reiterated its commitment to making the necessary investments to drive top-line improvement while remaining disciplined in its approach. It's a reminder that even the giants are not immune to the pressures of an evolving marketplace. For investors, this signals a time to pay close attention to its forthcoming strategies and how these might impact not just the company but its competitors throughout the food sector.
With our headlines now covered, let's pivot into a detailed sector analysis encompassing technology, energy, finance, and a few other key areas in light of today's developments. The technology sector continues to capture the imagination of investors, particularly with the moves by Intel and the emphasis on semiconductor innovation. The industry is fiercely competitive, and strategic moves such as potential fab spin-offs are reminiscent of a game of high-stakes poker, with each company carefully guarding its chips. If Intel successfully navigates these structural changes, it could set a precedent for other tech giants who are currently grappling with similar pressures. Meanwhile, the Nasdaq's performance this morning adds further credence to the idea that investor sentiment in tech remains buoyant. But the big question is, can these companies continue to innovate fast enough to maintain their competitive edge in an increasingly crowded marketplace?
In the energy sector, the narrative is equally compelling. The positive momentum seen in Arcadium Lithium stock is emblematic of the increasing importance of raw materials like lithium as the world accelerates its transition to renewable energy. The energy landscape is in a state of flux, with traditional oil and gas being challenged by cleaner alternatives. With governmental policies leaning increasingly toward green energy, companies that are able to capitalize on these trends stand to gain significantly. But here's a thought-provoking point. Is the current enthusiasm in renewable energy sectors backed by sustainable fundamentals, or is it riding an infinite wave of optimism? It's a question that has profound implications for future investment strategies.
Turning our attention to the finance sector, the ongoing interplay between inflation data, monetary policy, and market movements remains a pivotal focus. The Federal Reserve's delicate balancing act, particularly in response to recent CPI figures, has kept investors on their toes. Institutions are watching closely as the situation evolves. Every piece of data is scrutinized for indications of future policy shifts. It's a bit like watching a complex drama unfold where every actor, be it the Fed, central banks globally, or the market participants, plays a critical role. Add a dash of humor here. Sometimes I feel like I'm waiting for the next plot twist in a suspense novel whose ending I'm not allowed to guess.
On a global scale, market implications are significant. European and Asian markets have been watching these U.S. developments closely. Considering the interconnected nature of global finance, movements in U.S. indexes and the fluctuations in key commodities like lithium have a ripple effect worldwide. Investors are questioning whether similar trends will manifest in emerging markets where economic growth is both promising and fraught with volatility. In Asia, for instance, any changes in U.S. monetary policy are often met with nervous adjustments from local central banks. Meanwhile, European markets remain cautious yet optimistic, looking for stability amid global uncertainties. Such dynamics make it critical for investors to consider international diversification as a hedge against localized shocks.
Beyond the numbers and headlines, let's take a moment to talk about expert insights and predictions for the near term. I have to say my own view is that while short-term volatility is inevitable, especially in a world where a single CPI report can send shockwaves, the long-term fundamentals remain strong. With technological innovation pushing boundaries and energy markets evolving toward cleaner alternatives, the market retains a robust foundation for growth. However, this does bring us to an essential question. In the face of these global trends, are investors paying sufficient attention to the underlying drivers of change? Whether it's the rise of renewable technologies, the reformation of corporate strategies, or the subtle signals from monetary policy, every piece of the puzzle is significant.
Let's inject a little humor now, because in an industry as intense as ours, a chuckle every now and then helps keep our collective sanity intact. Imagine if market analysts were as candid as chefs in a kitchen. Today's special is a pinch of Fed policy, a dash of tech optimism, and yes, you might even get a side of small-cap surprises. Bon appetit! It's a lighthearted reminder that while the stakes are incredibly high, sometimes you just have to laugh along the way.
Now, stepping into the realm of detailed sector analysis, we begin with technology. With Intel's potential structural shifts and the competitive pressure from global semiconductor giants, tech continues to be the heartbeat of innovation. One can't help but compare the industry to a high-speed train with no brakes. Every turn comes with both opportunities and hazards. Investors must keep their eyes peeled on developments from key players such as Taiwan Semiconductor Manufacturing Company, which seems poised to become even more significant in any potential spin-off discussions with Intel. The tech sector's performance today, especially the rise in the Nasdaq, underscores an important fact. Despite the short-term jitters from inflation data and global economic uncertainties, investor confidence in tech's long-term prospects remains unbroken.
Next, let's shift our focus to the energy sector. Arcadium Lithium's recent gains illustrate just how critical raw materials are in powering the green revolution. Renewables are not just a trend, they're becoming an unstoppable force. In this context, companies that are well-positioned to benefit from increasing demand for materials like lithium are likely to see continued investor interest. And if you think about it, there's a certain serendipity in how nature's resources align with technology's appetite for innovation. However, even as we champion the green medium, a prudent investor knows that fluctuations in commodity prices and geopolitical influences can quickly change the game. It's like waiting for your favorite TV show to drop a surprising twist. You know it's coming, but the exact moment and magnitude are always a surprise.
In the finance sphere, the interplay between policy adjustments by the Federal Reserve and market sentiment remains a definitive driver of short-term volatility. The heated debates among economists about residual seasonality and the CPI exemplify this dynamic nicely. With central banks, both domestic and international, in a continuous balancing act, investors are increasingly turning to technology, particularly data analytics and AI, to navigate these choppy waters. And perhaps that's where our good friends at Pantheon AI come in. Our analytical tools help investors get to the heart of emerging trends, ensuring you're never left wondering whether the market is a Roosevelt revolution or just a Tuesday slump. It's a reminder that in today's interconnected markets, staying informed is not optional, it's critical.
The retail and consumer sectors, too, are undergoing their own transformations. CVS's stellar performance has certainly set a benchmark, and the mere possibility of mergers in the grocery sector, as hinted by the possible Kroger amalgamation, raises vital questions about consolidation strategies. Will convenience be king in the face of operational scale and technological upgrades? And more importantly, how will these shifts influence pricing and consumer behavior? These are essential questions for investors seeking value in a market that is both unpredictable and opportunity-filled.
On the global front, we're seeing similar themes echoed in other markets. In Europe, for example, investors are keeping a keen eye on how U.S. monetary tightening might ripple through their own economies. Meanwhile, across the Pacific and Asia, central banks are bracing for any signs that might compel them to tighten their own policies. The interconnectedness here is undeniable. As headlines from the U.S. unsettle or bolster investor sentiment, entire regional markets can experience a corresponding shift in their strategies. This reminds us that today's market narrative is not confined to a single country or region. It's a global conversation with investors from all corners participating.
Before we wrap up today's discussion, let me share some expert insights and predictions. My outlook is cautiously optimistic. The recent CPI report is certainly a wake-up call that the economic landscape is far from static. Yet every downturn breeds opportunity. If the U.S. dollar continues its bout of gains, one could see enhanced export competitiveness for American companies, even if short-term discomfort looms. And on the technology front, the resilience exhibited by the Nasdaq, combined with the structural shifts being contemplated by industry players, suggests that innovation is the real name of the game. We might even witness a period where short-term corrections open the door to long-term growth.
It does make you wonder, doesn't it? In an environment where every new report seems to challenge our assumptions, how can investors best prepare themselves for the next wave of transformations? Strategic diversification across sectors like tech, energy, and finance truly safeguard against volatility, or are we destined to dance to the unpredictable tunes of global capitalism? These are questions I encourage you to ponder as you navigate your own investment journeys.
As we draw this episode closer to its conclusion, let's take a moment to recap the key takeaways. First, despite a mixed performance among major U.S. indexes, with the S&P 500 and Nasdaq showing cautious optimism while the Dow and Russell 2000 experienced minor setbacks, the overall sentiment remains cautiously positive. Second, the debate surrounding the Federal Reserve's arsenal, particularly in light of a spiky CPI report, continues to be a focal point for market watchers. Heard are headlines today from CVS's stellar profit beat to Intel's strategic repositioning, and from energy developments in the lithium space to provocative moves in the auto and food sectors, all point toward an environment where agility and strategic foresight are paramount.
It's also important to note the broader sector analysis. Technology continues to be a hotbed of innovation and transformation. Energy is pivoting rapidly towards green alternatives, while finance and retail show the strong interplay of policy and market sentiment. And on the global stage, interconnectivity unmistakably links our economic fortunes, giving us both challenges and opportunities in equal measure.
I invite you to reflect on this. In these ever-evolving markets, how do you recalibrate your strategies when every sector seems to toss a new ball into the ring? Is it the lure of emerging tech opportunities or the promise of green energy breakthroughs that tempts you the most? And what about traditional sectors? Do they still hold steady ground, or are they a relic of a bygone era? These questions aren't just academic, they are the very essence of the decisions you'll be making as we advance in this exhilarating yet unpredictable market landscape.
Before I sign off, I want to give a shout out to Pantheon AI, your information co-pilot, for always being at the cutting edge of market intelligence. Our mission here is simple: to help you decode the complex tapestry of global finance so that you can make better, more informed investment decisions. And remember, you can always ask questions to our AI co-pilot. Don't hesitate to reach out if you need insights or clarification on the latest market movements.
As we look ahead to tomorrow's episode, I encourage you to join us again for another deep dive into the nuances of the market. Perhaps tomorrow we'll unravel more about the nuances behind corporate strategies or delve deeper into global monetary policies. Either way, we promise to bring you the most comprehensive and engaging analysis, served up with a dash of humor and a whole lot of insight.
So as we close out today's briefing, I leave you with this thought. In the midst of market volatility and rapid innovation, how do you stay grounded and make choices that serve your long-term goals? It's a question that each investor must answer in their own way, but one thing is clear: staying informed is your best defense. After all, learning shouldn't feel like a full-time job.
Thank you for joining me this morning. I truly appreciate your time and attention as we navigated through today's market updates, key stories, and sector analyses. Stay tuned, stay curious, and most importantly, stay invested in your financial journey. Until next time, this is your host from Pantheon AI, wishing you a productive day ahead and reminding you to come back tomorrow for more deep dives and insights. Remember, if you have any questions or need further clarification, our AI co-pilot is always here to help. Learning shouldn't feel like a full-time job.